In this video, I'm going to complete the balance sheet for the stock market company that is in its first month of business. So in previous videos, I showed you how to record the transactions in this journal here. Every transaction the company gets something and gives something of equal value, and each transaction balanced. After recording all transactions and adjusting entries at the end of the accounting period, we prepared the income statement, statement of shareholders' equity, the statement of cash flows. And to just recap, the income statement is always coming from the retained earnings or shareholders' equity column. It's your revenues minus your expenses. The statement of shareholders' equity comes from or summarizes all that went on in the shareholders' equity column here. And if you would, remember REDS. Revenue, give, good, or service. Expenses are E's. These are all the rest of them. That's where you get a service or use a good, such as cost of goods sold is using inventory. And then D stands for the dividends, and that's basically where you're giving your owner's claims back to the company or shrinking the company. And then S, and I do it in this order so you can remember REDS, S is the stock. Now the balance sheet, what we're going to do is summarize all our account balances at the end of the accounting period, which is May 31 in this example. So we're going to have to tally all of these accounts. So I'm going to go through now. When I say all, certain accounts. Notice first that this is at a point in time. Unlike the other ones, it's not telling you what happened during the month. It's just telling you this is where we ended up at the end of the month. Now cash, what you want to do is actually go back to your statement of cash flows, and if you recall, we basically organized the cash that came in and went out during this month as either an operating, investing, or financing activity. Then we summed up the change in cash, and here's our ending cash. So I'm going to link by entering equal and then clicking on the ending cash balance in the statement of cash flows, and you'll see the cell number E or equals B45, meaning that's where that number came from. For inventory and the rest of them, and we're going to go equal sum. The reason being is that we probably have more than one thing happening or one transaction affecting an account, so it's best to always say equal sum. Then what you want to do is click on the journal, hold down your command or control key, and what we're going to do is look for inventory, and every time we see inventory we're going to click on that amount. So I'm looking here, I see inventory, so I click on 400. I'm still holding down my command or control key, and here's another. And you can see here that the ending balance is going to be 100. Now what I do is I hit enter, and there's my 100 in my balance sheet. Total current assets, that's the subtotal, that's the sum, and you go equal sum, and then you're going to highlight by holding down your mouse and then dragging down to the inventory balance, and that picks up both balances, and you'll see the total there. Now I got to get equipment net of its accumulated depreciation, which equals its amount of usefulness left, in this case because they're getting rid of it at the end of the use of this equipment. So now let's go to the journal. I'm looking for equipment, and I hold down my controller command key. I click on the $900 equipment, and then you see down below this $15 is the amount of usefulness used of that equipment for that period, and then I hit enter. Total assets equals the sum of all your assets, but I don't want to double count my current assets, so I click on the current asset total current asset column and go down, or row, and then I go down one, holding down my mouse key so that it highlights both those cells in rows 53 and 54, and I hit enter. Now I'm going to equal sum even though there's really only one activity to notes payable, but it's always safer to because you don't know for sure, so it's easier just to do equal sum, go to your journal, and I only have one item, so I click on the 1000 next to the note payable under the liabilities column. and then equals sum. Now I'm looking for interest payable. Again, it's all payables or liabilities, so I'm looking under the liability column. Total current liabilities, those are all the obligations coming due within the year. And then I'm going to go get my stock, and again it's safest to do equal sum. Oops. And stock is part of Reds under shareholders equity, and I'm picking up the 2,000 under the stock column. Then I have retained earnings. Well, I'm going to have you just look here. I'm not doing the equal sum, but I want you to look at the retained earnings column and see that there's a lot of activity here. Well, in the income statement, we had already summarized net income, or the earnings for the period. In the next statement we did was the statement of shareholders equity. We showed what happened to retained earnings. So to get my ending balance of retained earnings, I'm going to click the equal sign. I'm going up to my statement of shareholders equity, and I'm clicking on the ending retained earnings balance. That's the amount of earnings kept by the company as of the end of May. Then you do a sum to total your liabilities and shareholders equity. On this, you're going to not double count your total current liabilities, and you're going to hold your mouse key down and go all the way down to retained earnings, picking up all three, and then you will see that your total assets, 3,155, equals your liabilities plus shareholders equity. And that's how you do the balance sheet.